Hello, everyone, and welcome to the Everything Money channel. As always, we're here with Seth, handsomely Seth, with this powerful beard, and your Uncle Paul. If you're new to the channel, we analyze stock, we analyze real estate, we do all forms of business investing, and today we're talking about NIO. This is so incredibly popular, Paul, and you wanted to be the one guy on YouTube saying long-term buy NIO is a terrible company to buy.
Fundamentally, I am not buying NIO. I think it's a void, but short-term. What did you do? You just announced?
So Paul's very disciplined, and at times I am not. And I was researching this company, and I keep hearing it and hearing it.
What were you researching?
And I tell Paul,
no. You were not researching anything.
Absolutely, Paul. There are facts about NIO that you don't know, and for example, so I went behind Paul's.
There are facts you don't know. Go ahead.
That's true. I went behind Paul's back. I invested $8,000 in NIO of my portfolio.
No, you speculated. You traded $8,000 in NIO.
I traded $8,000 of NIO, and sure enough, it's gone up 56% in the last few months. Give me a second.
What the hell was that?
A notification. It's gone up 56% in the past, not months, couple weeks, Paul. I've made back $4,500, and it's been quite incredible for my portfolio. But again, fundamentally, I'd like to see why you're the only person on the internet saying this company is a no-go for you.
Ready?
Go ahead, Paul.
Market cap, $72 billion. What's Ford's market cap at right now?
20 something or 30?
Okay, call it 30. So it's 2.5 times the size of Ford.
Oh boy. Okay, go on.
Okay.
Paul. Okay.
PE, what's that mean?
PE ratio is price to earnings ratio. We want this less than 20.
Yeah, it doesn't exist. You know why? They lost $1 billion in the last year. Profit margin, negative 26%. Their gross margin,
Go on, Paul.
it's 13%. That means every car they sell, they're making 13% on.
Is that good or bad?
Well, what do you think Ford's that?
Are we comparing?
Well, we have to, don't we?
Yeah, I guess so.
17%.
Okay.
What's Tesla at? The other company that I can't stand, 23.5%.
Okay.
So it's bad.
NIO's bad.
But it still hits the check mark on the growth. No, it doesn't hit the check mark. I'm sorry, it does not.
No, of course not.
It's terrible. Okay.
All right. Should we even dare look at pillar number 3, which is revenue growth?
Revenue growth. Well, the revenue growth will be big.
This is our 8-pillar approach looking at the health of a company for
Okay.
stocks.
No revenue, 750, 1.1 billion. Check.
That's pretty good.
Sure.
How about profit growth is pillar number 4?
That's pretty good. Negative 380, negative 740, negative 1.5, negative 1.6. They're losing more and more money every year. But it doesn't matter, Paul. Okay.
Okay. Number of shares outstanding is pillar number 5.
Number of shares outstanding. 848, 332. No idea what happened there. $1 billion. X.
The shares they're issuing shares. Okay. Current assets greater than current liabilities.
Okay. Current assets, $3.8 billion. Current liabilities, 1.6. Not bad.
Not bad.
In fact, they have enough money to pay off their debts pretty much. Not bad.
That's pretty good.
There's a check mark there. Yay, we have a check mark.
Free cash flow growth, Paul?
This is negative. This is terrible. This is X. Look, look at their operating cash flow. It gets worse and worse every year. So this is getting worse and worse every single year. X, and there's no price of free cash flow. X, because it's negative. Okay, let's talk about this, Uncle Seth.
Okay, so
How long did that take us? About a minute?
usually this takes us 15 to 20 minutes.
Let's talk about
the hype.
Guys, this is a hype stock. This is all about the euphoria. It's about people saying, look how much money I'm making. It's Seth saying, I'm making about 52%, about 56% of my money.
Yes.
Guys, do you see this thing? This is called Parabolic.
Now, other channels that I watch, Paul, that we won't even say their names, they love this parabolic climb because this absolutely means they even guarantee it's going to just keep going, Paul.
Oh.
Absolutely.
So let me ask you a question. Can anybody find me a parabolic rise in history that just kept going? That didn't end up doing this?
Well,
you can't.
Can I enjoy the ride up, Paul, and then
Sure.
just sell when it starts falling?
You're right. We don't know when this parabolic rise will stop. But don't call it investing. You're not investing. You're purely speculating, hoping the parabolic rise just keeps going. But here's what happens.
Go ahead, Paul. This is the killer.
Are you selling? Exactly. You're not selling. Everybody thinks they're going to leave faster than everybody else. This could have been the first drop. Oh, but it went back up. This could have been another start of the drop. Nope, it went back up. This could have been a start. Nope, went back up. This could have been, nope. Because this is what happens. Everybody thinks that all these drops are going to be on the way up.
Well, it's down 4 or 5% down today. So.
And then when this starts to go like this, it'll go like this, and then like this, and then like this. And everybody's going to say, no, this is a start. This is a start. This is a start. Okay, just keep going. More power to you. Go put your money in there. But these don't end up well.
What would you rather have people do?
Be smart. If you want to put 1% of your money in this just to have fun, 0.5% just to have fun, go do it, more power to you. But if you think you're investing by doing this, you're not. That's the reality of it. You're not investing. You're speculating. I'm okay with that. I'm all in favor of speculating. Look at this, look at the technicals on this thing.
This is momentum, right, Paul?
This is momentum. Look at this, guys. This crossed right here, about the $10 mark. If you'd bought when the 200-day crossed above the 300-day, you'd be up a ton of money right now. But here's what's going to happen. When this comes crashing down, you're not going to sell until the 200-day goes below the 300-day. So you're going to lose back a lot of your money, which I'm okay with. But just remember, this is all momentum. This is all exciting. This is all euphoria. This is not reality. The company loses more and more money every single year.
People are calling this the second coming of Jesus and Tesla, but really, you look at a company like Tesla, where you and I were discussing this when it was $100 a share, $150 a share, $300 a share.
Musk's net worth is
Now
up $100 billion this year. He's up four or five times. I get it.
Tesla is over $3,000.
I'm wrong then.
So I guess the point is there still some room for growth if China's in love with EVs?
I have no idea. Is there room for growth? Yes, but how long do you have to wait for that growth?
So why do people call this? People call this a growth stock. What do they say by that, Paul?
It's a justification for why they're going to pay any number out there. And if you don't think it's any number, then what's this chart? This chart says like literally any number will work. Oh, it goes higher, still that works. Go higher, it still works. I would sit there and say, you find at $53 works, not at $500. You might sit there and say, well, maybe not 500, but when it hits 500, you'll have all the justification in the world for 500.
Yeah, that's true.
But because
Paul,
right now at 53, you don't have the justification. You sit there and say, oh, it works. But if you'd been down here saying, well, what about 100? Oh, 100. This can be 100 soon, maybe.
So the point of all of this is what you're educating our viewers to be a little more disciplined into getting into companies that are
good, stable cash flow, reasonable growth, and you're paying a reasonable price for it. You will make better money paying a low multiple of cash flow and earnings and revenue than you will by chasing high flyers like this. Because for every one of these that might work out, like the Tesla, you're going to have hundreds that do not work out. Hundreds that don't even get to that level. That's the point. I'm experienced to see the history of it go, yep, this is exactly what they said in 07 with real estate. Exactly what it said in 99, 2000 with stocks. Paul, you don't get it. This isn't a blah, blah, blah company. Oh, okay, cool. Have fun. This is a new way of doing business. Okay, cool. You're telling me the internet in 99, 2000, software in the internet didn't have amazing growth potential? We did about 0.5%. It's probably about 0.5% we did 20 years ago versus today in terms of internet and so we are up 200 times in terms of how much of the internet. But how many internet companies went bust and went to zero? They all did. Pretty much all of them. Yes, Amazon didn't, eBay didn't. Everybody else went bankrupt. And under, not everybody else. You get what I'm trying to say. So you guys bank on all this potential. One of the things I want to teach you is just because something has a lot of potential doesn't mean it's not overpriced. It can still be overpriced. Because if you don't believe in fundamentals, then then I expect all of you to pay $500 a share when it goes there. If it goes there the next month, you have to pay it. And if you don't, you're a hypocrite. Because if fundamentals don't matter, all that matters is this, then go do it. But at some point, fundamentals do matter. At some point, investors say, well, how am I getting my cash back? If it's based on share price, that's called speculation. It's called the greater fool theory.
So this hit me, Paul, is that I think what you're teaching is, I hear everything you're saying, and I'm a big fan of hype because hype can go a long way in this world. But I think what you're trying to teach me over these past many years now is that I don't need to do this.
Yes, correct. In fact, you'll do better. You know who doesn't buy these things? Warren Buffett. And he's the best investor of all time. And he never buys these things. There's rumors that he bought Tesla recently. I don't believe it was him. Maybe it was him. They still haven't found out yet, but they're saying it was him and his company. I don't know.
Yeah, when I say need, you're saying is if I just take a more disciplined approach to investing in strong companies that are
You'll sleep better at night. And if the prices go down, you'll know why they're going down, and you won't care. You'll go buy more shares.
I can still retire with a very nice.
If this goes down, what are you going to do? You know, if this starts to go down, you're not going to think, well, shoot, now they're losing money. Now oh, crap, this is a problem.
Yeah.
All of a sudden, when things are going down, you care about fundamentals pretty solidly.
That's true, Paul.
All of a sudden, it's going down. It's like, well, how am I going to get my return if the stock's going down? Because you're not going to get it from cash flow. When I buy a company that has immense cash flow and a good multiple of it, if it goes down in stock price, I go, great, I'm getting the cash flow still.
Yeah. Right. Because the price, if you follow sound financials, the price of the stock doesn't matter as much.
Yeah.
Interesting. If you like what you see, if you like what Uncle Paul is saying, a disciplined approach to investing, you can join our Patreon, patreon.com/everythingmoney. You will join our Discord server of discussion with like-minded people who might like what Paul's saying, which there are a bunch in there now. It's been incredible. You will get Paul and Seth fireside exclusive, uncensored fireside chats where we talk about a lot of things we can't talk about on YouTube. And you will get access to Paul's mind in terms of his portfolio, what he's investing with, daily trading, and it's incredible. So join the Patreon page. You will get access to our
And like
app.
this video
And make sure you smash
subscribe
that like
and
button.
send it to people because I want to pay Don and Seth more. I want to invest more in the app. I want to do all these things. I'm not even close to break even on this entire show for the yearly basis. I don't care. But help us out so I can sit there and give them more.
I double dog dare you to someone, a NIO fan, to share this video with a NIO fan and see what they think. Thanks for joining us on the Living Money channel. Love you guys. Appreciate it.